Ben, good to have you. What do you make of the price hike? Can they pull it off?
Well, some of the things that were pretty interesting to me were the ad sales, element of this, that, Disney actually has an ad sales infrastructure, and we're seeing a lot of the streamers kind of create that component within their service. So if you don't want to pay the higher price, you can watch ads and, participate in a different way. And also, I agree with what the CEO said. I totally think it's unbelievable service and has a lot of content. It has library content, it has Fox's old content, it has Disney's old content, and it's continually refreshing with new content. So, and the genre mix is also pretty impeccable because they also own Nat Geo, which is a, super big nonfiction company as well.
So Wall Street is applauding the streaming numbers, among other things. Also, the parks business was really what drove the quarter. But on streaming, Disney total, including Hulu and ESPN, Disney Plus, overtaking Netflix in subscribers by the first time. Do you think that is coming at the expense of Netflix?
I think these are still unbelievable value propositions. As you look at the choices you have to make as a family and where you're going to spend your money, having these suite of services is incredible. And Netflix offers one range of content, Disney offers another range of content. And we can't forget about Apple and Amazon, two of the biggest companies in the world that are right there investing. And so I think these are great value propositions. I look at it as a father. I look at it as the chief household officer in my house. And I love these services. And I do totally believe in Disney's brand and its suite of brands. But I'm watching as Netflix is building their own brands and creating overarching brands under which they can put more programming. And you can't forget still the power of talent. Like, talent is almost like IP for Netflix, and that's why they continually invest in it.
It's true. They can raise, I will pay a lot higher prices for Cars 1, 2, 3 to keep my kids distracted. So I understand that as a parent, Ben. But some of these hiccups that we've been seeing lately in streaming, how has it affected what you do, content, and the race for content and what people are paying for it, what these companies are paying for it?
Luckily, we're very much in a genre mix within our company, and we do tons of nonfiction content. So we're partners with Netflix in the Untold brand, which is a sports documentary series. We have two big ones launching on August 15th, one about the America's Cup race in 1983. And then we have tons of shows on Disney that aren't the big ticket scripted shows. We have the Bear Grylls series over there through Nat Geo. And so for us in our particular spunky little independent company, we're strongly positioned for this because I think there's going to be more growth in the alternative genres. I think we've watched as documentaries have just exploded and are becoming a bigger and more important part of the mix. And they're 1/100th of the cost of the big motion pictures, yet can deliver audience and scale. So for us, and where we sit, we are in a great position. We also believe in talent and have a deep standing and long-standing relationships with big talent. And those big talent are more and more important to these platforms, as is the ability to produce at cost and efficiently. And that's what we do at Propagate.